We receive a lot of questions about what annual property taxes need to be paid on real estate purchased in the Dominican Republic. What is the one-time property tax when taking ownership, and how much does monthly maintenance cost? In this video, we'll cover everything in detail. It's important to distinguish between apartments bought on the secondary market and those purchased as new builds from a developer. And I'll start specifically with the secondary market. For the calculations, I'll use an apartment priced at $300,000, since this would typically be a spacious two-bedroom apartment of about 1,300 square feet, located in one of the luxury projects near the beach. In the Dominican Republic, when you take ownership, you pay a one-time tax of 3% of the property's value. So, when you make the purchase, you'll have to pay $9,000. You'll also need a lawyer to close the deal. The lawyer's fee is about 1% of the property's value, which means another $3,000. And now you're the happy owner of an apartment. What's next? After that, every year you'll pay an annual property tax, just like you do in most other countries. In the Dominican Republic, the property tax on apartments is quite low, since the first $180,000 are not taxed. So, if your property is worth $180,000, your annual property tax will be zero. But in our example, we chose an apartment worth $300,000. $300,000 minus $180,000 is $120,000. And it is from this amount that you will have to pay an annual tax, which in the Dominican Republic is 1% of the property value. So in this example, your annual property tax would be $1,200 per year. But when it comes to new builds, everything is completely different. But attention, not always, and this is a common mistake. Many people think that by buying a new build, you automatically get tax benefits. In reality, that's not quite the case. In order for the buyer to be exempt from the property transfer tax and receive a 15-year exemption from the annual tax, the construction project must have what is called CONFOTUR. This means that the project has been approved by the authorities for tax exemption, and everyone who buys an apartment in this project will not have to pay taxes. However, it should be noted that practically all major developers have CONFOTUR in their projects. But if you buy from a smaller developer, it may well turn out that this project does not have CONFOTUR. Therefore, when purchasing a new build, the first thing your lawyer should do is make sure that the project has CONFOTUR. In fact, the savings here are quite significant. Don't forget that real estate prices are rising, and what costs $300,000 today will cost $400,000 in 4 or 5 years. This means your tax won't be $1,200 a year as it is today, but $1,000 more. Accordingly, over 15 years, you will save at least $50,000 to $60,000 on taxes. Plus, you don't pay the $9,000 tax on the transfer of ownership when purchasing. Another important point is that after you take ownership, the CONFOTUR is tied not to the property itself, but to you as the original buyer. Accordingly, when you sell the property, the tax benefits do not transfer to the new owner. And after the sale, this property will be taxed as regular secondary housing. So, we've covered the taxes. The second frequently asked question concerns the condominium maintenance fee. It can vary from complex to complex depending on what amenities the condominium has and which additional services are included in the maintenance fee. In addition to concierge services, cleaning, landscaping, and maintenance of common areas, luxury complexes often include extra services in the maintenance fee, such as shuttle service to the beach, golf carts, beach club membership, and much more. On average, the condominium fee for a two-bedroom apartment with an area of 1,200 to 1,300 square feet will be about $250 per month. Electricity is never included in the maintenance fee. You pay for it separately according to the meter readings. But another frequently asked question is how much it costs to manage a rental apartment. Most of our clients use the property they purchased in the Dominican Republic for their own vacations only a few months a year. The rest of the time, the apartments are rented out short-term through the complex management. Almost all luxury complexes offer this service. Moreover, as a rule, this is a high-class service that includes renting out apartments through various online platforms and travel agencies, meeting guests at the airport, check-in and check-out, cleaning the unit during guests' stay, minor repairs, and much more. So, as a rule, the cost of a full management package for a rental unit is 20% of the rental income. In this case, the management essentially becomes your partner. If the unit is rented out poorly, their earnings will also be low. Accordingly, the complex management is interested in making sure your apartment is rented out as much as possible. Today, almost all new residential complexes have moved away from the widely used flat fee management model, where you simply paid a consistent monthly fee for their comprehensive management services. This scheme is hardly used anymore. The Dominican Republic is an investor-friendly country, and there is no difference in taxes between those who have citizenship or residency in the Dominican Republic and foreigners. Foreigners pay exactly the same taxes here as local residents. To register property in your name, you do not need to open a company as is required in many Caribbean countries. In the Dominican Republic, you can easily register property in your own name, and it absolutely does not matter whether you are a foreigner or a local resident. This was Maxim Baginsky with you. See you again on the channel.